Warren Buffett is arguably the best investor of our time, and regardless of what anyone says, he has quite the record to show for it. From 1965 to 2019, his company, Berkshire Hathaway, has returned a staggering 2,744,062%, or an average return of 20.3% per year. To put this in perspective, if you invested just $1,000 in Berkshire Hathaway stock in 1965, you would have over $27 million today. But how did Warren Buffett achieve such an outstanding return? He always kept by certain principles that allowed him to make intelligent investments where the odds of making money were heavily skewed in his favor. One principle that Warren Buffett attributes to his success is investing in his own circle of competence. A circle of competence is the area of expertise that you know more about than most other things in life. We all have a circle of competence from what we know and do regularly. For example, if you like camping and other outdoor activities, you know what the best outdoor brands and companies are, and what works and what doesn't. Or perhaps you know a lot about computers and gaming consoles, and you would be able to explain why a certain company's chip or graphics card is much better than the competition, and you know what's most popular in the industry. We all have many areas that we can confidently say we know more than the average person. These areas make up your circle of competence. Warren Buffett explains that it is extremely important to stick within your own circle of competence while investing. For example, you may work in or know a lot about the entertainment industry, and you may have seen a company looking to disrupt the industry like Netflix long before a lot of other people got the chance to notice or appreciate it. You could have analyzed the business based on what you knew about the industry and perhaps made an investment in Netflix at a time when everyone else was skeptical and didn't understand it as much as you. According to Warren Buffett, when investing, it is extremely important to make sure to invest in a company that you almost completely understand in and out. Now, this may seem like no small task, but combined with the knowledge you already have, it is much easier and more interesting to learn more about businesses in the industries you already understand. However, this does not mean that you should only invest in companies that are in the industries that you personally know and deeply understand, but you should take extreme caution and research a lot before you go searching outside your circle. When you're young, your circle of competence is probably not as large as you'd like it to be, but it is still possible for anyone to learn more and expand their circle of competence. Warren Buffett, at the age of 21, decided he was going to expand his circle of competence. Like anybody would, he read hundreds of pages about the insurance company Geico and their business model, and one day decided to hop on a train and go from Columbia University in New York to Geico's headquarters in Maryland. He then met with top executives at Geico who explained every in and out of the insurance business and exactly how they make, sustain, and grow a profit. Then he did more research and decided to make an investment in Geico, which was new to his circle of competence. His investment had returned over 50% within the year. Now, I know most people are not able to or even want to go hop on a train for a few hours and meet with corporate executives to learn everything about a business, down to who supplies their vending machines. But the important thing to take away from this is that your circle can expand. Stick to your circle of competence when you must, but if you have a deep interest in a company or industry, learn as much as you can to the point that you feel as comfortable with the new area as you do with your other competencies. More importantly, one thing Warren Buffett didn't have as a 21-year-old business student was the internet. Much of the information Buffett learned on his trip to Geico's headquarters can now be learned with a quick search on the internet. The biggest takeaway from Warren Buffett's idea of a circle of competence is that it does not matter what you know about, but rather how much you know about it. There are thousands of stocks in the stock market, and it is up to you to decide which companies you would like to consider. If you know almost everything there is to know about the digital design industry, you would probably know that for now, Adobe kills the competition. You would be able to accurately consider an investment in Adobe stock or perhaps spot the next star company in this industry before Wall Street. It is equally as important to invest in your circle of competence as it is to remember to steer clear of investments that you just do not understand and have no desire to understand before investing in them. To Warren Buffett, speculation is not investing. To invest, you must seriously understand the business you are becoming an owner in and accurately predict how much cash the business is expected to give you in the future. This type of prediction is only accurate if you stick to your circle and thoroughly understand the business before you invest your hard-earned money. Warren Buffett has always stuck to what is in his circle of competence, even while missing most of the big technology stocks like Microsoft and Google along the way. He was just unable to thoroughly understand the businesses in this industry. However, I'd say he's done pretty well regardless. With all this in mind, never forget what Buffett has said about one's circle of competence. What an investor needs is the ability to correctly evaluate selected businesses. Note the word selected. You don't have to be an expert on every company, or even many. You only have to be able to evaluate companies within your circle of competence. The size of that circle is not very important. Knowing its boundaries, however, is vital. Thank you so much for watching. I hope this video has added a little more to your own circle of competence, and I'll see you again next time.